The cup and handle is a bullish continuation pattern that indicates a consolidation phase and can signal buying opportunities. As the name suggests, this pattern has two main components, the cup and the handle. The cup appears after an uptrend and is similar to a bowl. After the cup is formed, a minor downtrend starts to develop, which looks like a handle. If the price leaves this trading range with a strong momentum, the pattern is completed, indicating a continuation of the former uptrend. For the cup and handle to act as a continuation pattern, the existence of a previous uptrend is essential, and it's better to be located in the middle of a bullish trend. The cup should have a rounding bottom and looks like a bowl rather than a V-shape. The ideal pattern would have the same highs on both sides. In this example, you can see that the market has formed a cup and handle pattern. But in this case, the shape of the cup is more like a V rather than a bowl. Although the price has moved to higher levels after completing the pattern, its movement does not have our desired trend. The cup part of this pattern should be almost a third or two-thirds of the initial uptrend size to guarantee a solid pattern. The handle is also an essential part of this pattern because it gives traders the final warning about entering the trade. The pullback making the handle should not pass the upward movement on the right-hand side of the cup. Sometimes this handle looks like a flag or pennant that slopes downward. We can place our stop loss below the low of the handle. If the price goes beyond this limit, the chances are that the pattern fails. The take profit level can be measured by adding the cup depth distance to the breakout point and extending it upwards. But sometimes it is safer to wait until the break of the last major fractal high, which is the starting point of the handle, and then enter into a buy position. In this example, you can see that the market has formed a cup and handle pattern in the middle of an uptrend. After breaking the flag pattern upwards, the price has gone up to the starting point of the pattern, but suddenly changes its direction and hits our stop loss below the pattern. To prevent this problem, it is better to enter the market after a clear breakout of the highest point in the cup and handle pattern, which did not happen in this example. Therefore, although this pattern looks like a good trade setup, we refuse it due to a lack of final confirmation. As mentioned, the best place for this pattern to form is in the middle of an uptrend. But in this example, you can see that a similar pattern formed at the end of a long-term downtrend, which eventually triggers a strong bullish movement. But trading with this pattern is riskier than the first one. In the end, if this video was useful to you, please support us by pressing the like button. And don't forget to subscribe and press the bell button to be notified of new videos. Till next time.